All right. Welcome to another weekly analysis where we're going to look at crypto, gold, and GJ and anticipate some of the moves that will be happening in the next coming week. Today is August 24th, and today is Sunday. Market has opened, so let's just dive in. We'll be doing some analysis. As I said, we'll be anticipating where the direction is for the rest of the week. And without further ado, this is the last week of the month, so there will be some sort of retracements happening. So we'll keep account of that, and we'll also take a look at some key events that will be happening through news, and so we can factor in those news timings and to give us a little bit of advantage in our trading. Starting out gold, this is XAU USD. We have weekly time frame here. We're consolidating. We Let's just remove all of the drawings. Whenever you're doing analysis, try to remove all of the drawings and start fresh eyes. Start looking at things. Okay, I can just remove it here. Okay, all right. Weekly. So what is happening here is that if you take a look, this is a major support area. We have tried to come down and close below. We couldn't. We tried to come down, close below. We couldn't. We went all the way down to 36.20, 32 to 67, but we wicked up. So this is a heavy support. And lastly, we also tried to break below. We could not. At the top, we have gone up towards 34, 37. So that will be our major point of resistance. That is on a very higher time frame as of right now. But I just wanted to point out that we have a very key zone at 33.26, which we're looking to break in order for us to continue down and fill this wick. All right. Now, since we did close on a bullish note last week, and so on a Friday, this whole thing flipped because overall, up until Thursday, before the FOMC meeting, we were continuing the bearish downtrend. But with FOMC and anticipating the rate cuts to happen in the near future, to evaluate how we can mitigate any incoming risks to the economy, we are we that pushed gold in a bullish bias. Um, so as of right now, we have created the support and we're pushing bullish. So on a weekly time frame, what I'll be looking forward to is for this candlestick to continue to break below and form a lower wick, and then as it is breaking above this area, as it's breaking above its current wicks high, which is 33.70, it should continue to pull. So it should continue to push up and fill the ranges on the left hand side. So something like this, right? Let's see. Let me make this to what you would see. Okay, so this line would be a wick down. So it'll be a wick down, and as we're continuing to break above, this candle will turn green. So as it's turning green and breaking above its own high, that will be an indication for the price to continue to further upside momentum. And there, once it breaks its previous candle's high, then we have clean candle on the left hand side, and we should continue to push up. That is the mindset I would go into for this week if we're breaking above these highs. That is on gold. If we take a look at on daily time frame, right? We have broken out of this area. We have broken out of this area right here. And as long as we don't close back in this, this wouldn't be a fake out. This will actually be a break of the previous structure, and we should continue to push up because there's clean candlesticks on the left-hand side. The reason why I say this because there's been 1, 2, 3, and this is the fourth try. You could call this a third try. Let's not count this one as it wasn't a strong try. So we have 1, 2, and third try, we actually broke above the structure, which means that there is volume in the market. And as long as it's not closing back below in this previous range, then it should continue to push up and fill the previous these highs right here. Because if it closes back in this range, if it closes back below 33.54, 33.50, then that means the previous structure breakout was not an actual break. This is a fake out, and then the price should continue to push down and test these support right here, which is 33.15. Remember that. Okay. All right, so that's gold. Let's go ahead and take a look at GBPJPY quickly. So GBPJPY weekly, we closed bearish. So we have a resistance right here. That we have been trying to close above, but we have not been able to. If this candlestick would have closed above somewhere in the 200 area, then we could possibly push up all the way into the highs of 206. The reason why, because it's on the left hand side we see here is it's clean candles, it's clean range. The price should continue to. The reason it didn't, so because it did not close above the structure and formed actually a resistance. Last week it formed a resistance here. We should be able to continue to break below the current candle and at least test these lows here, and then continue to push down to fill the entire range on the left hand side. So something that I'll be looking for. Let's see. Let me make this red. Let me also do this. So something along the lines of this. So this right here, the green candle is is going to turn into a wick. So we'll be looking at something like this, perhaps. Right? This whole range should be filled. But first target would be this range right here on the left hand side, which is 197.855. The reason being is that we are currently creating a higher wick. We're creating a upper wick for the candlestick to come down and test these lows here. The candlestick does not have any bottom wick as of right now, which is very, very unlikely for it to close like this. So this I'm anticipating for it to be a top wick. Then the price should continue to move bearish and then break its own low and continue to test these lows at 197.846. That's on GJ. And if we, let's say we break below, then we start continue to push up and we close above these ranges. Let's say if this week's close is at 200, then we should continue to push up to test these ranges at 205. All right, that's on GJ. By the way, I just recently bought this room freshener thing, and my room smells amazing. Anyways, all right, so crypto Doji. So last week, because of the FOMC meeting, all of the crypto and the stock market, actually I wasn't looking at stock market, but crypto, commodities, and foreign exchange pairs, they were moving very volatile. They because because of the meeting, because of the FOMC, we actually we went all the way down and came back. Actually, we were bullish. This wick was not created up until Thursday. We were down here somewhere with just all this candle to be red and no upper wick. Just on Friday, we went from 2100.21 all the way up to 24.24. But it went down and closed bearish. So I was hoping for this candle to close bullish so the next candle could break above and continue to test these highs. But as traders, we cannot marry our analysis or marry our, I would say, the mindset of where I want the price to go. I will go where the price goes instead of the other way around. So I wanted this price to close above and then this to be bullish, but it actually closed bearish. So once this kind of structure forms, what would happen is that I'm anticipating for this to, to have a wick, which it has created some sort of a wick, but it should not break. It should not break this high right here. So crypto, uh, Doge to be exact, on a weekly time frame, it should not go above 24.40.24 cents. Otherwise, this sell idea will be invalid. As of right now, it's bearish. So what I'm anticipating is that it should not break above its previous high and continue to push low and test these ranges back to 20.21. 0.21. That is what the candlesticks and the structure of this pair is telling us. So we're good on that. Let me remove these drawings actually. Yeah. So I'm anticipating for the price to not break above and continue to push down and test these lows. Um, and if it breaks above, then we should be the sells are invalid. Then the weekly time frame is invalidating this previous candle, and we should possibly continue to push up in the upcoming weeks. But as of right now, I'm thinking there should be more of a retracement, and maybe in the next coming weeks we could possibly test these highs. Right? Ethereum, Ethereum. So last week, it's because of the FOMC, we had this whole bullish move. Before the FOMC, we were actually bearish. We were at 41, 40. We were roaming anywhere around 4,200 to 4,300 as of Thursday. But because of FOMC, we went up all the way up to 49.51, creating the highest of Ethereum so far. So what does that tell us? If this candle breaks, if this candle respects its previous low, which is at 4,000, and breaks above its own high, then it should continue to push up and go up in the 5,000s. So basically, what I'm looking at is right. So this something like this. So as long as this candle breaks above its own high, it should continue to push up and possibly, leave us by the end of this week in the 5,000s. We'll see. Excuse me. So as far as sells on Ethereum, let's say if the candlestick goes up, right? If the price goes up into 4,000, 4,900, but it struggles to break above, or if it goes above, but it comes back down and break its own low. So let's say, for example, we're in the middle of the week. The price has already created the low. The low is 46.65. We are currently at 49.69. But then we start breaking down below, and then we break its own low. When we break the current candle's own low at 46.53, it should continue to push down and have these lower lows tested. The reason why, think about it this way, if the price is moving up, it has created the lower wick. It has rested. It's well rested and it's trying to go up and break these highs. But then it's starting to come back and break below the previous rest area, then that means the price could possibly push further down. So at that point, the buys will be invalidated. With that, we'll do last on Bitcoin. Let me remove these ranges here. Bitcoin, we have actually consolidated for last month and a half. We've tried to break above with 124, 353, 352. So about 120, 125 almost has been the highest, and we struggled to break. Now this week we're actually breaking below the previous support zone that it has created, that has held up in the last 2 to 3 weeks. we have closed below that support. So as long as this week's candle it breaks, it wicks up, let's just say it wicks up and then continue to break its previous low, we should be able to come down and hit 107 or 108, in these areas. And then depends on how we react in those areas. We should continue to push that test these 99,000 ranges. But given crypto, or let's just say Ethereum and Bitcoin, they are holding themselves very well at this time. We'll see how it goes. We're in the last quarter of the year. Last quarter of the year, some of the altcoins they run fairly well, and Bitcoin has its share of a percent upwards percentage for the entire year. So I'm gonna see it, watch how it reacts to these prices, but I wouldn't be putting my money as of right now for to buy Bitcoin because there's no clear indication. We are breaking below the previous structures. We were breaking below the supports. This is not a indication for something to go up. It's in fact indication for something statistically, in fact, indication for something to go down, right? With that being said, we'll continue to monitor. I'll try to see if I can possibly do another recap of this video by the middle of this week and see where we are and how we're anticipating for the weekly candle to close. Up until then, I'll see you guys later. Once again, this is Trade with Tayyab. I'll see you tomorrow in the live stream at 6:30 Central Standard. Take care.